Hi guys, Ben here and welcome to Motivation to Invest. A hedge fund is a managed fund which is designed to protect your portfolio from market uncertainty while at the same time growing your investment. One of the largest hedge funds in the world is Bridgewater Associates, founded by the legendary Ray Dalio. Ray Dalio is famous for his books on principles in addition to predicting many of the previous stock market crashes. Now, I have numerous videos on Ray Dalio's rules for success and stock market predictions, so you can check those out on the link below. So how do these hedge funds make their money? Well, hedge funds make their money by charging a management and even performance fee. This is usually between 2 and even 20% of the entire portfolio, which can seriously impact your investment returns. Studies have shown that the top 10 stocks common across all hedge funds have actually returned over 185% since 2014. This has beat the market, including the prestigious S&P 500 ETFs. So in this video, I'm going to reveal my top 5 most popular stocks common across all these hedge funds. By the end of this video, you should have gained real insight into these hedge fund stocks, allowing you to invest in them without paying those crazy management fees. So without further ado, let's dive in. Coming in, flex, I just wanna win. Welcome back guys to Motivation to Invest. Before we get started, go ahead, smash that like button for the YouTube algorithm. That allows us to continue creating more great content like this for you guys. In addition, if you would like more investing tips and exclusive stock market picks, which I personally have invested into, then you should definitely subscribe to this channel. Be sure to turn the notification bell on. That way you'll get notified when I release future stock picks. With that being said, let's get into the video. Coming at number 5 is Alphabet, the parent company of Google, and it has the ticker symbol GOOG. I actually love Google as a stock. It has close to a monopoly on internet search, with over 90% of searches being performed on Google. That's not to mention their other technologies such as Google Maps, G Drive, Gmail, YouTube, and even autonomous vehicle technology. Alphabet is currently held in 148 different hedge funds, with over 16.2 billion in fund positions. Some noteworthy hedge fund shareholders include Boykin Curry, David Blood, and even Al Gore. In addition, I personally hold shares in Alphabet and plan to increase this holding on the dips. Now, I did a more detailed video on why I purchased shares in Google, so you can check that out on the link below. Coming at number 4 is Alibaba, ticker symbol BABA. This is China's largest e-commerce platform run by the great Jack Ma. Alibaba is a great business-to-business trading service which connects people with suppliers directly. In addition, Alibaba launched its cloud computing business in 2009 and is now the biggest player in China. Its cloud business brought in a revenue of 1.13 billion, which was a 66% year-on-year growth. According to Daniel Zhang, the CEO of Alibaba and now its chairman, he said, "I think cloud will be the future and the main business of Alibaba." So could Alibaba follow Amazon's growth? Well, according to John Freeman, an equity analyst at CFRA Research, the growth, evolution, and operating margin profile of Alibaba's cloud services are following the path of Amazon Web Services. At present, AWS represents only 1/9 of Amazon's revenue, but generates over 60% of its operating profit. There is little reason to believe that Alibaba's cloud business will somehow veer off trajectory and be different, according to Freeman, the analyst. Alibaba is currently owned by 170 different hedge funds with over 22 billion in fund positions. Now, getting into the top 3, at number 3, we have Microsoft, ticker symbol MSFT. Microsoft is the legendary computing giant founded by the great Bill Gates. But as Bill Gates is now off fighting the world's diseases, his successor, Satya Nadella, has took the reins. Microsoft realized that paid software is more difficult to sell in an age of low-cost alternatives. In addition, they recognize that tablets and mobile phones are fast replacing PCs. Thus, a newer Microsoft business model has had to evolve, which is focused more on freemium software packages and a higher concentration on its cloud computing business. So far, their new business model seems to be working, with Microsoft posting record cloud revenue in 2020. Microsoft has second in the worldwide market share of cloud infrastructure, just after Amazon Web Services. In addition, Microsoft wants customers to be more engaged and fixated on its products. CMO Chris Capocella explained this concept with a simple example. Rather than using Skype just once on a Sunday night to phone home, you could use it to Skype for messaging 15-20 times a day. That's real engagement. Moreover, in a recent letter by Diamond Hill Capital, they stated that Microsoft has outperformed as the value of the company's productivity and collaboration software was prominent, with workers across the world shifting to a remote working environment. Additionally, the long-term growth opportunity of Azure, Microsoft's cloud computing platform, should remain attractive in a variety of conditions. In Q1 of 2020, the number of bullish hedge fund positions on Microsoft increased by about 24%. So a number of other hedge fund managers seem to agree with Microsoft's growth potential. Some noteworthy hedge fund shareholders include Ken Fisher and Chase Coleman. I also own Microsoft in my own personal portfolio. Current number 2 is Facebook, ticker symbol FB. Facebook is the world's largest social media platform, which also owns Instagram and WhatsApp. According to Facebook's Q1 Investors Report for 2020, Facebook's daily active users were 1.73 billion on average, an increase of 11% year over year, with its monthly active users at 2.6 billion, an increase of about 10% year over year. Facebook has also been recruiting hard, with its headcount currently at 48,268 as of March the 31st, 2020, an increase of 28% year over year. As almost everybody is on Facebook now, Facebook is looking for new avenues of growth. They recently introduced Facebook Shops, which is partnered with Shopify. This allows businesses to connect to customers via Facebook and Instagram. Morgan Stanley analysts predict this could potentially add an extra $4 billion in annual revenue. Moreover, Facebook plans to introduce a dating service called Secret Crush. This is already available in Colombia, Thailand, Canada, Argentina, and even Mexico, and is set to expand to 14 other countries across South America and Asia. With Secret Crush, Facebook users will be allowed to select a handful of friends who they are interested in romantically. Those friends will be notified that an anonymous friend has liked them. If they pick the same person for their crush, the interest will be revealed to both parties. It's a little bit like a more natural version of Tinder. In addition, Facebook has revealed big plans to build augmented reality glasses and map the world. In 2019, they announced a project called Live Maps, which will create 3D maps of the world. Facebook described these live maps in aspirational terms. They stated it would create multi-layer representations of the world using crowdsourced data, traditional maps, and footage captured through people's phones and AR glasses. This would allow you to get notifications in thin air, or even have a holographic avatar walking around with you and your friends. Now, this may sound like science fiction, but if anyone can do it, Facebook can. Facebook stock is currently held in 198 hedge funds with over 24.4 billion in fund positions. Some noteworthy hedge fund shareholders include Chase Coleman, Andreas Halvorsen, and I personally have shares in Facebook in my portfolio. Current number 1 is Amazon, ticker symbol AMZN, the world's leader in online e-commerce. Amazon has seen a massive increase in popularity in 2020, with customers spending $11,000 per second on its products and services. Despite the economy being in crisis, Amazon's share price has surged by over a third and reached all-time highs. This has further cemented Jeff Bezos' position as the world's richest person, with a fortune of over $138 billion. But that's not all. While many companies have been firing workers, Amazon has been hiring. The company actually hired over 175,000 extra workers in the US alone. Amazon had humble beginnings as a modest online bookstore which was started in a garage. These days it's worth over $1 trillion, and they have big plans for the future. From its cashier-free stores, which allow customers to use the Amazon Go app to purchase products inside a store. There are now 10 Amazon Go checkout-free stores across the US, including major cities such as Chicago and San Francisco, with a further 3,000 stores planned for 2021. The just walkout stores are a step beyond self-service tills and could spell the end of queuing at the supermarket and the needs for cashiers or supervisors. They also envision Alexa to be a constant companion with you 24/7 to help you run your life and keep you company, with Alexa's own earbuds set to launch very soon. Amazon also plans to introduce fleets of delivery drones, which can drop off packages direct from its warehouses. The irony is that Amazon Prime Air is being developed in the UK rather than the US, and a service is being poised to launch in Britain first. Right now, US regulations state that a drone must remain within the pilot's line of sight, but Britain's National Air Traffic Control Service is a lot more enthusiastic about the technology. In 2018, Amazon also teamed up with JP Morgan and Berkshire Hathaway to develop a non-profit company which has the idea of bringing innovative healthcare in a simplified, high quality and transparent way at a very reasonable cost. In the near term, you also have Amazon Prime. In addition, Amazon actually purchased Whole Foods, which could allow Amazon to pursue its dreams of providing grocery shopping with its Amazon Fresh service. But that's not all. Amazon also plans to introduce AI-powered home robots, which can mop your floor and make your bed. Lab 126 has reportedly been working on the project for a number of years and said it is close to the final stages. Amazon's stock is held in over 202 hedge funds and has over 28 billion in fund positions. Right guys, so diving into the numbers for Amazon, we're over here on the Stockopedia platform. Now this is my favourite platform to analyse stocks. One of the most unique things about this platform is that each stock is given a stock rank. So the stock rank consists of three variables: momentum, value and quality. So in this case we can see Amazon has a stock rank of 67, its momentum is 85, its quality is 84, however its value is only 15, which means it's not a great value stock. Checking out the revenue, we can see the revenue has been increasing steadily over the past few years and is predicted to increase even further. On average, it's got a 25.8% compounded annual growth rate, which is tremendous. Operating profits have also been increasing massively. So as you can see here, revenues increasing, net income and earnings per share is forecasted to increase. Over on the analyst consensus, now this is another one of my favorite features of this platform. So on the analyst consensus, you've basically got analysts from all over the world who give their opinion on this stock. So we've got people from Morgan Stanley, Wells Fargo, JP Morgan, Deutsche Bank. So in this case for Amazon, 3 say hold, 29 say buy, and 18 say Amazon is a strong buy. So the current ratio is okay, but really that could be higher. So that's how many times the company can pay off its short-term debts. Price to book value 18.97, that's very, very high. And PE ratio 92.1, which means the stock is incredibly overvalued. So yeah, that's a quick review of Amazon. If you wish to know more about this platform and how you can use it to analyze stocks yourself, then I have something very, very special for you guys. So exclusive to the viewers of Motivation to Invest, I have a special link which will give you guys 25% discount when you sign up to this service. So I'll leave it in the link below. You can check it out, see what you think, see if you like it. Personally, I use this screener all the time to analyze stocks and just find the right time when to buy, which is crucial when investing. So yeah, I'm not sure how long that link will be available to me. So if you're interested, check it out below. Right guys, so there you have my top 5 most popular stocks in hedge funds. Be sure to check out part 2 of this video where I analyze stocks 6 through 10. These are crucial stocks that you have to invest into. So be sure to check that out on the link below. So what do you think of these popular hedge fund stocks? Do you have them in your portfolio? And what are your reasons why? Comment those thoughts below. Also, if you found this video informative, please smash that like button. That really helps us out with the YouTube algorithm. And with that being said, I'll see you guys next time.
Coming in.
yeah, flex, I just wanna win, yeah, LABB who we running with, coming in, yeah, flex, I just wanna win, yeah.